welcome to the table where everybody eat. Y'all know what to do, man. Drop a comment below, hashtag everybody eat 2025. If it was your first time to the channel, hit that subscribe button and that notification bell so you don't miss out on these bangers. Also, make sure you hit that like button to get this video out to everybody and give me an algorithm. But anyway, let's keep it pushing, man. Today we talking about ticker symbol CORT, Corcept Therapeutics. Now, this stock has earnings this week, I believe on the 14th. And we all know I don't really like to do levels or look at charts this week of or the same day as earnings. Stocks can go up based off of bad earnings and bad news, and they could go down when it comes down to good news and good earnings. Either way, I'm bringing this stock on your radar because I believe this is a real good company, a good pharmaceutical company, which if you're in the Discord, you already know about this stock because I mentioned Corcept Therapeutics. I believe it was the beginning of the year. So yeah, on January 9th, I said one of the fewest stocks to remain resilient during this week's volatility. Good entry is at $49.75, but excellent entry at $45. Personally, under $52 a share appears solid for a 10-year hold. So this stock actually, after this day, if I was to pull up the chart, I guarantee you within the next couple of days, basically, if you all remember around January 13th, we had a nice pullback in the overall market. This stock here, I believe, pulled back to about $48, maybe $49, if I'm not exact. And ever since then, now you have it. Let's pull it back up to the chart. We are currently sitting at $67.54 as of yesterday's close. But right now, in the pre-market, it's trading at $68.50. I believe this stock is up in the past month, 32% in the last month. It is up $16.50 in the past month. So again, like I say, they have earnings. Now there is a resistance above at $70, but we'll get into that once I dig into the charts. Now I'm gonna go and show you guys their financials real quick. So as you can see, I say this is a solid company to invest in, a solid pharmaceutical company to invest in. Now, pharmaceutical companies, they are hard to find, but when you find them, you have to keep them on your radar. The reason why they're hard to find is because they spend a lot of money on R&D, a lot of money on research and development. They're trying to come up with new drugs, they're trying to cure diseases, they're spending a lot of money on trials and tests before they actually get the product out, and then they also got to get the product FDA approved. Speaking of this stock here, Corcept Therapeutics, they have a product that's already FDA approved. I can't recall the name of it. I believe it starts with a K. It's like Chlorum or Corlum. Either way, we'll get to that later on. That drug there has already been FDA approved. It's for adult patients with Cushing syndrome, so it helps with like the hyperglycemia part of like diabetes and things of that nature for adult patients with Cushing syndrome. That is already FDA approved. Their revenue is increasing because of that particular drug. And then now they have another drug that they're actually submitting for FDA approved, which I believe is in phase 3 trials of testing. I believe it's called Grace and Gradient. Again, we'll get into all of those things as well. However, as you can see, their revenue growth year over year from 2016 to 2023 has went from 81 million to 482 million. Their gross profit from 2016 to 2023 in a 7-year span has went from 80 million to 475 million. Their net profit has went from 8 million to 106 million. But if you notice, the second year from 2016 to 2017, their net profit went from 8 million to 129 million. Their earnings per share went from 7 cents to $1.30 in that first year. Then after that, they had a slight decline in 2018, but then they rebounded in 2019 and been on a decent trajectory ever since. Now their earnings per share is at 95 cents earnings per share. As you can see, also their gross margin is staying pretty stagnant in the 97, 98 percentile range. Their net profit has been increasing. It has went from 10% in 2016. Again, I have to look into 2017 to see what happened that year. Their net profit went from 10% in 2016 to 101% in 2017, then down to 30% in 2018, and 30%, 29%, 30%, 25, and as of recent, 22% has been their net profit. But that one year in 2017 where their earnings per share was $1.30 from 7 cents. Their net profit went to 102% from 10%. Like the numbers are astounding. Continue on their balance sheet. Their current assets is at 458 million. When they started out in 2016, their current assets was only 65 million. However, their liabilities is 105 million out of their assets of 458 million. So that's pretty good. Shareholders' equity is at 506 million. When it started out in 2016, it was only at 41 million. Cash flow is one big thing that I love to see. How is this company continuing to increase their cash flow, their free cash flow on top of that? Now, the operating cash flow has been pretty good. Again, from 2016, 18 million up until 2023, 7 year time span to 127 million. Now their CapEx, it doesn't look too bad. They're only spending 139,000 as of 2023 in their CapEx. Free cash flow, however, is at 126 million, going from 18 million in 2016 to 126 million in 2023. So that there is their financials. This is why I actually like this company. Overall summary of them, there's a strong buy from 4 analysts. The PE ratio is about 53 cents. Now, their 52-week high is at 71.29. $70 is a pretty strong resistance. I do recall that I think this stock also has like a 20% short float, maybe 18, but somewhere between 16 and 20% short float of this stock, which I mean, it's a solid company, but it has ran up, I believe, roughly like 200 and something percent from its 52-week lows, if I'm not mistaken. The last year alone is up 193%. So this could see a pullback after earnings. We don't know. Let's go ahead and let's jump into the charts. So if we go and look at the chart here, let's zoom out. So as you can see here, this stock, like I say, I announced it around the 50 some dollar level. It pulled down to that 49. I say 49.75 was a good entry. Put it a little lower to that, like I say, 48. Ever since then, we went up to here, and now we're kind of just holding up above the $64.87. A good entry for me, to be quite honest, would probably be around that $58 mark. I mean, a re-entry or so, I guess you could say, will be around that $58 mark. But I wouldn't mind seeing how we hold up around the 60 to 62 area after earnings, but I kind of see this stock actually beating earnings because if I go to the day chart, the 50-day moving average is still looking pretty good. We are super extended though, however. Oh my gosh. Oh yeah, look, I haven't been watching this thing since $23.50. This stock was on my radar last year. I think they had like a forward PE of like 19 or something like that. Like so that's what I would look for if I was to be getting into Corcept. I don't know about options on this. I'm looking more at shares, just accumulating shares. I see this being a $200 stock within the next 2 years. I mean, I'm just throwing that out there. I haven't really thought it through because another pharmaceutical stock of mine that I actually used to like around $70. Remember the ticker name fully? Yeah, Crystal Biotech. Over the last 5 years, it's up 140%. Last year, up 38%. But anywho, I remember seeing this around $70, $80, somewhere around here. Actually, nope, that's not even it. But it was around 70, $80. And yeah, here you have it, man. So off of them. So zooming in one real quick. So yeah, we're curling on the hour chart. So again, I would see how we go off earnings, or I would just wait up until earnings to see if we get a pullback to the $62 level. If not, the $58 level. Now, if we fall below 58, this thing has potential to really go back to the 50 to 52 for kind of a reset with it being up as much as it is. But again, we shall see. We don't know. Now, moving on if Corcept is a solid growth stock, after I mentioned earnings to you guys, I want to read this article to you guys that I just found saying about their earnings growth. It says that while historical earnings per share growth rate for Corcept is 5.3%, investors should actually focus on the projected growth. The company's earnings per share is expected to grow 36.4% this year, crushing the industry average, which calls for growth of 16.6%. Now, this is what I was talking about in regards to their assets when I looked at their balance sheet. So, Corcept has a STA. I'm not sure if that means a standard. Oh, no, it tells us right here. Its STA is the sales to total assets ratio of 91 cents, which means that the company gets 91 cents in sales for each dollar in assets. Comparing this to the industry's average of 42 cents, it can be said that the company is more efficient. So 91 cents in sales for each dollar in assets, and their assets, I can't remember what it was. Oh my gosh, I think it was like 400 something million. I can't recall. In addition to efficiency in generating sales, sales growth plays an important role, and Corcept looks attractive from a sales growth perspective as well. The company sales are expected to grow 12.8% this year versus the industry average of 9.5%. I'm going to put the link in the description below for the Discord, as we are currently running a 7-day free trial. You'll get all my latest moves. You'll get earnings reports. You'll get watch lists. You'll get stock alerts with in-depth synopsis of why I think a stock is going to do what it does, with price points, entries, exits, stop loss, things you have of that nature. But again, a link will be below in the description. Appreciate you guys tuning into this video. Tap into the next one as we continue to bring you guys this heat. We out.